Good morning and welcome this morning to Trading Futures, another great webcast from Schwab Coaching. There was the opening bell, which means that it's time to get started here. It doesn't mean that that's when the market started to move around because it's already done that. But welcome to all of you. Welcome to my good friend Connie Hill out there in the chat. Connie's a 20 plus year veteran of the financial market. She's there to help answer the questions that come through the conversation there in the live chat. For those of you that are with us live this morning, you have that opportunity to be a part of that discussion. If you're watching this in the recorded version, leave us a comment and we will get back to you on those as quickly as we can. So as we jump into this morning, I've been watching the chat going on this morning and a bit of conversation about the fact that, it's one of those days, again, not necessarily turnaround Tuesday, but not necessarily washout Wednesday yet either, or whatever you want to call it. There is some market movement going on, so we'll take a look at that. We'll see what's happening not only in equity futures but also in some of the cryptocurrencies, maybe a little bit of the metals, and the dollar moving around a little bit as well. So we'll jump in here to this discussion really quickly. A couple of quick housekeeping items as we get started this morning. Remember that everything we talk about simply for illustrative and educational purposes only. It is not any kind of a recommendation or solicitation of a particular account type or security or strategy or anything else. Remember that futures and futures options trading involves substantial risk. It's not suitable for all investors. Make sure you read the risk disclosure statement for futures and options prior to trading futures products. It's important to do that, and it's important to have that understanding that there is risk in trading futures. I don't know if you've ever heard that before. Futures accounts not protected by the SIPC. We're going to jump into a little bit of this discussion as we get into specific instruments today. But futures margin, also known as a performance bond, is the amount of money that you're required to deposit in your futures account to establish and to maintain a futures position. So it's not necessarily really buying or selling the futures position so much as it is putting up a bond and then establishing a long or a short position in that futures contract. And that's how we'll try to talk about it. But the shorthand is we're buying or selling. But the reality is we're initiating a long or a short position and then measuring that performance based on that. That requires a futures margin account. Now, we're going to be talking a little bit about those specific requirements for each one of those instruments as we get into this discussion. Remember that investing involves risk, including the loss of principal, and for some products and strategies, including trading futures, there is the possibility of losing more than that initial investment, i.e. more than that initial margin investment if there is a fast-moving market. Stop orders in the futures products behave a little bit differently than stop orders in equity positions. Stop orders on a futures product, if it generates a marketable order, if it's a stop market order, that order is going to get substituted by the exchange for an exchange designated limit order for that originally triggered market order. That limit order is going to be specified by what's called a protection band or a protection range. If a fast moving market moves outside of that range, you might have intended to just get filled at the next available price by setting up a stop market order, but that exchange designated limit order may result in the order getting rejected and not filled at all. So just be aware that that is a risk. We're going to talk some virtual currencies here this morning. Those involve special and unique risks. They can be significant. Just make sure that you read the NFA investor advisory and the CFTC customer advisory on these products. We're going to be using the Thinkorswim desktop software platform, specifically the Paper Money platform. Remember that it is a great learning environment. However, it is not a guarantee of future success out there in the real world. And there are certain things that the Paper Money platform does not do that a live trading platform will do. One of those is using studies in searches and scans. The other is in the area, one other is in the area of fill prices more often than not because it's algorithmically derived. Fill prices will, in the Paper Money account, occur at the midpoint. That isn't always the case in live trading. where those fills will happen at based on market forces. And remember that past performance is no guarantee of future results. I made mention of this last weekend. We were in San Diego, and I talked about all of the rules and discussions and warnings that we have as traders, and that you hear every time you jump into a webcast or every time we give a presentation. And I've got a good friend that's a flight attendant, and she said that the things that we talk about, the rules that we talk about, are written in blood because of accidents. Those are the reasons why we have safety rules. The reasons why we have disclosures and the reasons why we have the discussions that we have about risk is because those rules, those disclosures, are written in losses, dollar losses. The reason that those exist is because that occurrence has happened. So when you look at those disclosures and you say, okay, I get it, I've heard it before, and you tune them out, well, maybe sometimes that's to your detriment. I'm just saying. So these disclosures about things like futures products written in dollar losses. All right, let's take a look at what's going on with the ES here today. This is the /ES. This is the S&P 500 index futures. And we've kind of been watching something develop. And my good friend Rachel Dashel, who is in our Chicago network studio this morning, I'm sure is talking about this and is thinking about this. But we've got the beginnings of, actually, we've got about 2/3 of a potential head and shoulders reversal. Yeah, I like that, Paul. Same reason lawnmowers warn you not to use as a hedge trimmer. Do not put the lawnmower in your pocket, as it may break. But we've got this potential of head and shoulders reversal building. And we're at the top, perhaps, maybe, I don't know, of a right hand shoulder on a potential head and shoulders. The idea being that if we get a move down through this level, the 73.40, and I talked a little bit about this yesterday in a couple of different places, that 73.40 becoming kind of a critical area, we've got the possibility that this overall market will just take that level and duplicate it. Now, this isn't, by far, is not a guarantee of where it's likely to go, but it is an expression of where it could certainly go. And if we take that level and we kind of shoot a line back this direction here, you can kind of see the significance of that level. That was that previous resistance right around the just above the 7,000 mark. Now, remember, these are in the kind of that area. Remember, we build levels of support and resistance with big fat magic markers and not bright lines, not fine point pens on the chart. So there is that possibility of that downside movement. Now, we're not there yet, but it doesn't mean that it can't get there pretty quickly. We are seeing some upward movement. The momentum's starting to pick up a little bit, but we've got a pretty good bearish move in RSI, pushing down towards that lower portion of its range. So you got some downward momentum going on, even though we've got this little bit of a rally happening here. We take a look at the ES, or excuse me, the NQ, the NASDAQ, by the way, which we are in this particular account long a micro NASDAQ. And there's that possibility of rolling back over as well. Again, same type of head and shoulders. And to Kay Brown's point, yeah, it looks like some pretty good support back down at the 7,000. Pretty good support here. If we do the same thing and we shoot this line from the top and we drop it to right there, and we'll just duplicate the line from the head of the pattern down to the bottom of the pattern, down to the neckline. We're a little bit further off of that area, that resistance area. There's a bit of a gap there, but that was certainly a level of support back here. Again, remember, these are not precise, not too particular, not too precise. We draw those with big fat magic markers. So it's getting back in that area. There is that possibility of it making a move back there. It's not there yet, and it's not triggering that point yet. Russell 2000, kind of a little bit different, because you could maybe make the argument for a little bit of a skewed head and shoulders neckline, but this is starting to break out, and that's where we're maybe starting to see a little bit of activity this morning going on, is a bit of a breakout above some of these resistance areas on the Russell 2000. So maybe a rotation back to some of the small caps. So we'll take a look at the micro contract here on Russell 2000. If we were to take a look at starting to see some bullish upward momentum here, maybe breaking that diagonal downtrend line on the RSI, kind of right at that level. And that might be a potential trigger. So as we get into some of those, some of these equity contracts, we'll take a look, or excuse me, equity futures contracts on the micro side, we'll jump into that discussion. So I just wanted to set the table here really quick. Let's zoom back out. And before we go away from here, let's take a look at /DX, which is the dollar futures. It's been rallying higher, although starting to pull back, maybe giving us a bit of a bull flag type of possibility. The one that a lot of people are watching constantly these days is if you drive a car, crude oil futures, and starting to see this front month contract or the continuous contract weakening a little bit. We're down about 3% today, down in that $88 mark. So Sam says airlines are back up. So that is a concern. Well, a concern if you are long oil, because that's maybe one of the reasons why airlines are up is oil's coming down. If we take a look at /HO, which is the heating oil contract, that's down as well, and that's very likely one of those reasons why airlines, maybe not, but perhaps one of the reasons why airlines are moving to the upside here. Any other studies besides RSI to get a better directional besides RSI alone? RSI is not really a directional indicator. RSI is more of a momentum indicator, and it just simply confirms or diverges from directional price movement. You're going to get directional indication from price, but RSI is going to give you an idea of what's going on in terms of the momentum behind that. So here's kind of a good example, right? That heating oil, we'll just kind of take this example here since it's on the screen. Heating oil is pulling back, and you've got kind of lower highs in the price, but at the same time, over kind of the same time frame, that same range here, you've got higher lows in the RSI, which might suggest that downside trend momentum that you're seeing in price is kind of backing off a little bit. Well, another way to think about this is as a bullish momentum indicator, you're starting to see maybe bullish momentum picking up a little bit. Higher lows on the RSI indicating that you're making higher, there's starting to be some buying pressure pushing prices up, because all RSI is doing is it's measuring where candles are closing or where ranges are closing relative to the highs and the lows. And if they're closing closer to the highs, RSI is printing higher. One tool, though, that can be effective in conjunction with the RSI, and in order to do this, I'm going to pop over to our our futures grid here really quick and show this over here, because it's one of the tools that I have on this single grid. And I'm glad you asked the question, because it's a good transition now into what we're looking at. So let's take a look at heating oil at the moment. So we're consistent with the one that we were looking at. So you're starting to see that little bit of a bullish divergence, downward movement, but bullish movement on the RSI. ADX, or average directional index, another Wells Wilder creation, is a trend strength gauge. So momentum and strength of trend. This is completely directionally agnostic. It's just a trend strength gauge. So the overall trend, if you look at the look back period here, which is 6 candles, has been down. That's been a pretty strong trend to the downside, but it's starting to turn around a little bit. It's losing a little bit of its directional momentum. So above 25 on the ADX is generally considered to be a strong trend. Above 40 or 50, depending on who you listen to, is generally considered to be a really strong trend. So we've got a really strong really strong bearish trend on heating oil that's starting to fall off a little bit. We were starting to get higher lows. So there's that possibility of some bullish upward movement in heating oil coming off of this a little bit of a higher bounce, which is consistent with RSI. Yeah. And I would agree, Sam. Yeah, a different ball game, a little bit. I mean, there are some technical analysis discussions, right? If it's a physical commodity, obviously for anything there are geopolitical and exogenous forces that are driving movement, but these are going to be fairly similar in terms of how they show what has been happening, because they're all look back indicators. Any technical indicator is. There's nothing that really projects forward in time and predicts the future. So ADX is a better indicator, not necessarily better, but it's a good directional strength indicator. Yeah. All right. Okay, so let's take a look at what a couple of things that we need to manage. First of all, the first one that I want to think about managing here is this /DX. We're 5 days out from the contract expiration. It's been moving in our favor, not so much today. And our expectation is upward movement. Where we entered and initiated the position was at 99.18. It's currently trading at 99.75. Pappy asked the question, BP effect column. This is something that you can customize, but BP effect should be um, a constant in your monitor tab display. And that should show you what the current level of margin impact is. You can change this in your application settings and in positions. I believe you can change that position margin BP effect. You can change that to margin requirement and click on apply settings. And now it'll change that margin requirement, and that'll show you your maintenance margin in that particular trade. So you can do that right there in setup, application settings, positions, and change position margin BP effect to margin requirement, and it'll show that as opposed to BP effect. So that's how you get to that and make that change. So I wanted to do that real quick. So let's take a look at /DX here. We're going to go to our charts. We're going to go to /DX. And we are long this position, but it's starting to back off a little bit. And the trend strength is gaining. That trend strength to the upside was pretty good, maybe getting up to that 40 level, getting to a really strong trend, but it's now starting to pick up to the downside, and we're starting to gain some trend strength to the downside. By the way, speaking of that, we've got a feedback summary or survey out there in the chat, so I appreciate you filling that out if you wouldn't mind. But here we are. Let's go to the trade tab for our /DX. We're at 5 days to go. We're not really starting yet to see much open interest rolling into the July, but there is a little bit of open interest rolling into the September contract. So that would suggest that maybe there's, because I think these have just come out. So starting to roll into that September expiration. Let's see if we can make that roll happen here, because I think we're long this contract. It's starting to pull back a little bit. We could do one of two things. We could just close it and wait for it to pick a direction, or we could roll it into that long position. And I'll tell you what, if it breaks this support level, which it seems like it's, as James Boyd would say, it's fixing to do here. It doesn't mean that it's gonna. But if we get a break there instead of a bounce, then what we may do is just look at taking this long position off, because that's been another bear flag in this short-term time frame, and just close this down. So what I'm going to do is I'm going to say, all right, we're at 99.65. Let's go back to our monitor tab. Here's our position. And we're just going to right-click, and we're going to create a closing order to exit this. And we're going to go to 99.65. And we're going to put that order on, and we're going to put this on as a stop, but we're going to do a stop limit so that we don't kind of suffer from that potential of a wide bid ask or wide protection band spread. So we're going to get that exit or hopefully trigger that exit at 99.65, and we're not quite there yet. We might be. What are we trading at currently? 99.70. Okay, 99.65 is going to be our trigger. And then I don't want to get out. I want to have this limit be within, so 99.65, 99.45. So about 20 cents move in that particular case. We're going to make it good till canceled. We're not quite there yet. So if this does bounce and go higher, we're still in this trade. So this is a stop limit order. We're going to read through this, and this is in order to close or flatten this position. And we're going to put that order out, make sure that it's in our futures group. And we're going to put that order out there as a closing order to take this trade off if, in fact, it breaks back down below that level. And then we'll look at, if this starts to pick a direction, we'll look at, see, we got a little bit of a bounce there. So we're still long, hasn't broken that level of support. Okay. All right. So let's do this. We've managed this one. The next one that we have to pay attention to is this one, because we're coming up 9 days to go on this front month of our crude oil calendar spread. It's working for us here. Crude oil's coming down in price. The long end of this calendar spread, the one that we are long, we're at 163. I think that's out to the September delivery. Nope, December delivery. We want that one to keep going up. We want this one, the one that is out to this is the July delivery. We want that one to keep coming down because we want those two contracts to start coming in closer together. We want that spread to be narrower. So we want these two coming closer together as opposed to further apart. So we want the long end to rise and we want the short end, which is this one, to fall, which it's exactly doing. But let's go look at the structure here. So we'll look at /MCL on the trade tab here. And we're starting to see a little bit of movement from the July to the August. So we might get a little bit of roll yield if we roll this from where it is now to the next deliverable and keep that shift going, right? Maybe not, well, maybe a little bit. Let's see. They're pretty close to one another. There's a little bit of disparity between those two, as there should be, right? Our expectation is these are going to keep going down and keep collapsing. So in order to initiate this roll, what we're going to do is we've got to buy back this one that we are short, essentially, and we've got to initiate a new short position in the August deliverable to keep this going. 9 days to go until contract expiration. We're not going to be taken into physical delivery. Either we'll roll it or we'll be reminded to roll it or it'll be rolled for us, but don't rely on that. That is not something that you as a futures trader should rely upon. The position may be closed, in fact, instead of rolling it. So we'll initiate this ourselves. We're going to roll from the N contract to the Q contract, starting to pick up a little bit of volume and open interest in that contract. So we're going to make that roll happen. So I'm going to go back over here to my monitor tab, and we've already got a calendar spread on, right? We're already long one and short one, but that's the point of this trade. So we're going to make this calendar spread happen as essentially a rolling order on the one that we're short. So in order to do this, we've got to create a rolling order, which is to buy that calendar, buy back the one that we're short, and then sell the forward. And so that's going to come out as perhaps a net debit in terms of the consequence of the trade. So what we're going to do is this is going to automatically, by default, the Thinkorswim platform is going to put us in a position where it's rolling to the next available expiration. So this is going to cost us a little bit, but it also positions us as we start to make that transition, because we've got that movement down. It's been going down. So to buy this back, this is exactly what we want to have happen here. So to buy it back, it's been getting a little bit less, but to sell the forward, the August, that's already a little bit lower here as well. So we're selling lower than the one that we're buying back. We're going to click on confirm and send. We're going to read through this order, make sure that this is what we're doing. We're closing one and opening another one. And we've got transaction costs that have to be paid attention to. We're going to go ahead and click on send, and we're going to fire this order off. And now what we've done is we've just simply rolled our position that we had. We were short the N contract. We are now short the Q contract, and we're going to continue to keep this calendar spread running. All right. So a couple of other things that we want to take a look at really quick that I saw that we're moving right off the bat here. We did that. We closed that one. We rolled the front month. So a couple of things moving, and that's that /MNQ that we looked at before. So let's go to our charts, and let's go to /MNQ. Now, for those of you who are brand new to trading futures, one of the things that I've not been going through as I've done this is some of the basics of understanding these futures contracts in terms of size. So I'm kind of trying to balance the idea of you've been here for a while and you already know what's going on, so we're just going to jump right into a trade, versus the idea of always going back and reiterating this is the basic function. So I want to give some service to both sides of that equation. So as we come here to /MNQ, this is the mini NASDAQ contract. We looked at, when we were looking at those futures at the beginning, just to get a sense of what the market is doing, we looked at /NQ, which is the E-mini large contract, essentially. This is the smaller contract. It is 1/10 the notional value of that large contract. So what I'm starting to see here, if we zoom in on this left-hand side, so the left-hand side on this particular chart grid is 1 year, 1 day. The right-hand side is today, 5 minutes. So here's that head and shoulders, or potential head and shoulders, that we were looking at, and starting to look for signs that it's moving back to the downside. Right-hand side of this chart, on the other hand, is today, 5 minutes. Now, I will do this really quickly because I know that there are some of you here in this webcast this morning that do not, or have not, had the access to this particular grid yet. So I'm going to just simply share this grid out in the chat. Anytime we share something, it is for illustrative and educational purposes only. It is not guaranteed as to time or accuracy. So you've got that grid out there in the chat. I will also put it in, that it is in the description for this particular webcast. But I'm going to jump in over here on the right-hand side really quickly, because what I'm seeing happening is this position. We saw a little bit of a rally and a blip above that resistance area. That's right there at that 29,750. Okay, 29,750. That's this line right here. And what I'm going to do is I'm going to activate that, and I'm going to extend it out here just a little bit more, 750, so it's even right about there. Okay, so there's that line that we just extended out to the right. We saw the blip above, and now it's moving back below. So our current position in this trade is long this Q contract, or excuse me, the M contract. So we have been long, and it's been doing okay for us, but we're now starting to see maybe that bounce down from this resistance level. This is how bounces start to occur, right? You get these little tests above, and then it starts to come back down. So we are long this contract. The question is, do we stay long in this contract, or do we reverse, or do we just simply close and wait for this to make a move to the downside? Because our downside breakout, if this were an inverted, or this head and shoulders reversal, if we squish this down, you can see how far down that that level is, right? That's way, we're down here at 28. We have to go down here to 28 before we get that horizontal, right? So let me just do this. Let's activate that drawing. I'm going to take that drawing out so that we can see it. There it is right there. Now we don't have to squish quite so far. Okay. And you know what we just did is we've just been testing, as we zoom in here, testing below that level. So we might get a move and we might look at trading this move from here down to here, right? From the resistance down to the support level. So the first thing I'm going to do is I'm going to get out of this long position because my thought process here is that we're not going to continue to go long. So I'm going to close this /MQ long or MNQ long, right click, create a closing order, and we're going to simply sell that one back, and I'm going to just close this trade down, and I'm going to put it in and make sure that it's to close, and we're going to send that off. Now we're out of that position. So we're no longer long the /MNQ. Now we're going to look at going short the /MNQ if we get a break below this support level. So let me kind of bring this back so that we can see this a little bit better. Just recognizing that our target in this trade, at least initially, is going to be right down here off of that support level. Now, could we keep it going? Yes. Okay. Could we keep it going? Yeah. So this is potentially going to be our entry into the trade. Let me draw that in right here. Entry into the trade. And then that makes it really easy to use that break back up above that resistance as our stop. So again, just kind of putting these letters in here to remind us of where those points might be. So if we get a break below this level, and you notice that it tested below that level. I'm going to open up this right-hand side so that we can see it a little more clearly. And I'm going to squish this back up. Now that we know that our target is down here, I'm going to squish our ADX down because our ADX is sitting below 24. So it's kind of a neutral trend at the moment. But we know that our target is down here around 28,727. 28, I'm going to put that in the scratch pad or I'm going to forget it. This is MNQ. 28,727, right? So 28,727 is our target. Okay. Now I've gotten that scratch pad so I can know where we're going. My exit's going to come at 29,757. That's good. Both Boeing aircraft model numbers, 727, 757. And here we are at our potential entry. So it started to bleed down through that entry price, but it hasn't closed down there. So I'm going to be looking for a close actually below the low of this candle right here. You know, that's a common methodology, just making sure that we've got a little bit of a buffer. It's actually, in fact, made that move there. So 29,620. So I'm going to draw a line real quick. 29,620. So I've got it. 29,620 is my entry. It's giving me enough of a move below that level, if it gets to that point, that it's confirming the move below. Doesn't mean that it's going to go that way. Doesn't mean that it's going to stay that way. Absolutely not. But we're looking for this to make that reversal to the downside here. So I'm going to right click and I'm going to do this. I'm going to create a sell custom with OCO bracket order. And the reason we're doing a sell custom is because I want to be able to create this as a sell stop to get into the trade, and then a buy stop to get us out if it goes up, and a buy limit to get us out if it goes down. Okay. So my sell stop, we're going to change this first order to a sell stop. And we're going to say stop, wait, don't do anything until we get to 29,620. What do we say? We're going to do 29,618. 29,618. I got to squish this over here. 29,618 is going to be our entry trigger price. Okay. And I'm going to make that good till cancel because I don't know when that's going to happen. Now, when do I get out if it goes down? Well, that's why I wrote that sucker down, 28,727. That's going to be my limit order to get out if it goes down. 28,727 is going to be my limit to buy it back. Now, remember, limit always says buy at this price or better. So, or better when you're buying is less. So that's going to be less, and that's going to buy this out, buy this back when that price, if that price gets down to 28,727. Now, my stop is going to be a buy stop. It's going to be stop. Don't buy this back until it gets to 29,757. 29,757 is a buy, is our buy stop. 29,757. See why I remembered that it was a Boeing model or aircraft number? We got to make that a good till canceled so that we keep that in mind. Okay. The reason I'm shorting MNQ is because it's technically setting us up for that right hand shoulder. But I'm not just blatantly going, hey, let's go short. I'm waiting till it gives us evidence that it's doing that, right? So could it go down? Yeah. I mean, hey, we saw a day last week that was pretty substantial to the downside. That being said, we're also stopping this out if it goes up pretty quickly. So we're going to put this order in place. Our buying power effect, our initial margin requirement for entering this short position or for establishing this short position is going to be $3,958. This is showing buying power effect. That's going to be essentially our initial margin into this trade. And we're going to put this in our futures group. Let's scroll down here. We're going to put this in futures and we're going to click send. Now this is to open and get into the trade. So it has to go below this 29,620 or 618 for us to get into the trade. That was our trigger for this moving to the downside and for us getting into the trade. It's not there yet. And if it doesn't do that, great. That's fine. We'll come back and reevaluate. But now we have that potential to capture that downside movement if it does move to the downside. So let's go through this again real quick. Tick size is 0.25. So that means this is going to be our significant set of digits right here. Tick value, when that moves in this micro contract, 50 cents. When this point value moves from 68 to 69 or from 70 to 68 or from 65 to 62, that's $2 of movement. So $2 of movement times that price gives us the notional value of our contract. If we click on the drop down, we go to futures. Our initial margin in this trade to go short, 39.57. We saw that on the order confirmation page. If we were going long, there's a little bit higher initial margin, and that's based on volatility. And that would maybe suggest, but it's not a guarantee, simply an inference that maybe there's more volatility and pressure to the upside than there is to the downside. But if this starts making a move to the downside, that could quickly reverse. Now, you don't typically see big disparities between initial long and initial short margin, but you do sometimes, and you do see it in indexes, and you do see it in metals where the predominant trend has been one direction or the other. All right, so now we're set up to capture that potential downside movement. The one other thing that I wanted to look at that I had on my list this morning that was starting to move was /MBT. So I'm going to take my grid again here and we're going to restore those cells and I'm going to do /MBT. This is micro Bitcoin. Again, cryptocurrency futures, virtual currency futures have their own unique and special risks. Remember, the virtual currency derivatives aren't storehouses of value. They don't have legal tender status yet. If you want to join me on Monday mornings for my introduction to cryptocurrency webcast, I'd love to have you over there. We talk a little bit about the futures contracts in context with gaining exposure to cryptocurrency, but we're also breaking down things like blockchain as well. But starting to see this little bit of a bounce. So looking at the potential of going short, I know that's going to, the crypto bulls, might be differing here, but I'm starting to see this short position building to the downside. No real trend. In fact, we're at 22 on the ADX, so not a lot of trend strength, but it's starting to pick up a little bit, and the trend direction is to the downside. So this is a downside trend It is gaining a little bit of trend direction. If I scroll back, I'm going to go to this 1-year chart. We're going to maximize that sell. I'm actually going to have to take this. I'm going to take this back to a, all right, we're short the MNQ. Looks like something's coming, something's moving things to the downside here. Let's take this back to a 2-year chart, maybe even a 3-year chart, and see if we've got a built-in level of support down here on Bitcoin that we might be targeting. We've got 6,000. We're currently 62,140, so that 6,000 level is a big round number, might be a level, but I'm also going to shoot a line across here where we had this previous level of support on the Bitcoin contract. So right about there, 5,300, we'll call it even. Now I'm going to put this back on a 1-year daily chart. We're going to go to the chart over here on the left-hand side, and we're going to look for that potential move to the downside. In fact, we might even go a symmetrical distance to the downside. But I'm going to go long this as a trend, or excuse me, short MBT as a trend trade, looking for this to make that move to the downside. So in the interest of time, I'm just going to right-click. We're going to create a short order or an initial position here that is short. We're going to go short this contract. And my buying power impact, 1,672. That's also my initial margin. I'm going to put this in my futures group, and we're going to click on send. Now, here's the risk. Bitcoin can turn around and move very quickly to the upside. It can also move very quickly to the downside. So putting this on as a trend trade, attention has to be paid to all of these trades. But putting this on as a trend trade, and now we are short, now I have to come back in and determine where do I want to get out if this starts to go against me. What's going to tell me that there's that possibility? So because this is a trend trade, I'm going to be a little more liberal in terms of my exit position, simply because I want to stay in this a little bit longer to that downside move. And so I'm going to look for this to maybe make that move back up above. I'm going to call it 60, just for easy math, I'm going to call it 6,400. So we're going to go to the monitor tab. We are short /MBT. So I'm going to do this. I'm going to create a closing order. We're going to buy that back, but I'm going to change this to a buy stop and get out at 62. Did we say, what did we say? I'm sorry. 6,400. We'll call it 6,400. So I'm going to go back to my monitor tab, right click, create closing order, buy this back on a buy stop at 6,400 or 64,000. There we go. That's going to be my stop. Big round number, I know, and that's likely to get taken, but that is a closing order. We're going to put that in our futures group. That's going to sit there as a waiting order to close that position. All right, so we've protected that position again. A couple of quick things. Let's pop back over here to our Trader Talks webcast page if you want more information about conditional orders. You can go right there. You can type that in. If you come to this page, we just have one simple ask. That's click on that subscribe button. We'd love to have you do that. I'm going to show you where that cryptocurrency webcast is. If you type in the word cryptocurrency, here's our playlist for introduction to cryptocurrency. This is the one that we did yesterday. How does cryptocurrency work? We did basics of cryptocurrency about a week ago, crypto concepts and definitions. We're going to do a 4-part series, and then we're going to extend it based on what the current status is of legislation and other things that's going to maybe take us in a different direction. If you want to learn more about trading futures at schwab.com/futures, click on that feedback survey. I appreciate that. My thanks to Connie Hill for helping out. My thanks to our great reviewers for helping out, and our production staff as well. Awesome to have all of you here with us. I'm going to be back in a couple hours talking about introduction to options. We're going to be talking cash secured puts today. So we will see you then. Take care, everybody. Take care. Bye-bye.